see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Bloomberg is your best source for earnings, news, and analysis. On Wednesday, GM CEO Mary Barra and Coca-Cola CEO James Quincy. Following their company's earnings announcements, this is Bloomberg.
Good morning, everyone. Bloomberg Surveillance. Thank you for being with us. Francine Lacroix in London. I'm Tom Keene in New York. To piece together where we are, Cameron Christ joins us, a macro strategist with Bloomberg that barely describes the way he synthesizes in what's going on. Cameron, we staggered 7 weeks into the year. Maybe it's 8 weeks. Who's counting? We're all rewriting our 2021 outlooks. How are you rewriting your outlook?
Well, I'm not quite yet because my outlook focused heavily on the potential threat of inflation as the year progressed. And I think that's still the sort of theme that people are watching and will need to watch. And we'll get the first iteration of that with the CPI report today.
Get the CPI report today, and we'll see how it filters in. And we're hearing from everyone. The Fed will wait. Chairman Powell speaking today as well. Cameron, it devolves over into the equity markets. It is a great bull market. From where you sit, looking at the Bloomberg, how unloved is it?
I think.
As you can see, we just opened new position for Swiss franc at 0.8909. This is long position. We still hold few positions, as you can see, on Swiss franc, one short and one long position. So let's see where it will lead us to. Okay, guys, if you placed an order, I'm sure you're already opened. So let's make profit from this trade.
Cameron, junk bonds are moving. Is there a danger that actually people are taking risk, which is fine now, which could then lead to something uglier in 2 years?
Oh, absolutely. I mean, we're at a point where non-financial corporate debt as a percentage of GDP is kind of literally off the charts versus the 3 decades preceding the pandemic, and yet you get less yield for owning junk bonds in absolute terms than you ever have before by a pretty comfortable margin. I think the yield on junk bonds is only about 45 or 50 basis points above the average 10-year yield that you got in the first 2 decades of this century. So there's relatively few pennies to pick up on the street from owning this stuff. And I guess the question is, when and where does the steamroller arrive to run you over?
Cameron, when you look at what exactly is priced in the markets right now, is it, are they worried that we're going to have higher inflation, or do they just expect, Jay Powell, who's doing an important speech today, by the way, to give them an indication that he's happy for the economy to run hot?
Well, I think those two things are not mutually exclusive. In fact, they're probably quite complementary. Yes, markets are pricing in a risk of greater inflation. You can't just look at break-evens because TIPS trade like credit instruments, so there's an element of risk appetite embedded in that. But even if you adjust for this, markets are pricing in certainly accelerating inflation moving forward. And you can see this in other ancillary ways like relative performance of various equity market sectors. I think at this point, the Fed has been pretty adamant that they're not moving anytime soon. But if we are in a situation where we get another stimulus package, economic growth closes the output gap, and we zoom the other way, so that economic growth and indeed the level of output is above trend, then that would naturally incur some overheating. And if the Fed is basically prepared to stick its fingers in its ears and close its eyes over this, then yeah, the outcome would certainly be an acceleration of inflation in a way that perhaps we haven't seen in a number of years.
Cameron, in the time we've got left, there's a generalization that the economists think Bitcoin is a fraud, and there's a lot of market participants that are loving Bitcoin at 46,000 right now. Cameron Kreis on Bitcoin, who's right?
Well, I think my attitude is this. 3 years ago, we heard about all this mumble about Bitcoin being money. I think we've kind of dispensed with that. Bitcoin, you don't need Bitcoin to be money for it to go up. And that's the people who are most interested in Bitcoin are the people who own it and have a vested interest in making other people buy it. No one's really talking about it. Maybe Elon Musk is trying to ginny up some interest. No one's really talking about it in terms of money anymore. So I personally think it's just another speculative tulip.
Cameron Kreis with us. Cameron, I want you to stay around. We've got a lot more to talk about besides tulips as well. Francine, I want to go over to London. I think we've really ignored the tulips and the hotels with the basic idea of the pandemic, of quarantine, and everybody's going to end up in the net across the street from our studios. It's not working out, is it?
Well, we don't know that yet, Tom, but so this is the UK plan, right? Is if you're coming in, so you're still allowed to travel into the country from red zone countries, so where they have a lot of variants, they put you in a hotel, but you pay for it. So you have to pay around, 2,400. I think it's for a 2-week stay. So it's definitely not the net. It's, I think, something a little bit below that. And then if you're from, the countries where you're allowed to come in, you still have to make 2 tests. So, we'll see whether it actually keeps virus mutations under control. And I guess my question to Cameron is market underpricing the health? I mean, I know we look at financial engineering and structure and all of that, but actually we don't really know if the vaccines will work in 6 months. And is that the biggest thing that markets should be watching out for today?
Well, it's certainly a tail risk that the vaccination process and the efficacy of the vaccines isn't what everyone is assuming. I think even the pharmaceutical companies have said that it doesn't confer a sort of forever immunity, and that there's going to have to be top-ups in the future. At this juncture, I don't think it's certainly a base case that the efficacy will wane after a few months. And if that were to be the case, then obviously that would imply a significant downside risk to a lot of assumptions out there.
Cameron Kreis with us, and he will continue with us. And Francine, I just want to say, from all the numbers I see, the United Kingdom is doing a better job or speed of job of getting vaccines out there versus the United States. I think that's been underreported.
Well, the process, Tom, the process is actually very clear, and I think they're getting to the over 50s in about 4 to 5 weeks, which frankly is like light speed compared to other countries.
Yeah, I just really want to make note that I think that's been buried in the sort of the zeitgeist of hotel quarantine, all that. The UK is nailing the vaccine process versus many other countries, including the United States. Peer-to-peer conversations, of course, always with David Rubenstein. Really timely. Charles Koch, Koch Industries, what do you need to know? This is the guy that owns Dixie Cups. That's all you need to know. No, he's one of the great supporters of more conservative voices across this nation. Charles Koch, the future of conservatism, the future of the Republican Party. This is Bloomberg. Good morning.
across the globe are dying by alarming rates. A report by World Wildlife Fund and the Zoological Society of London found that populations of mammals, birds, amphibians, reptiles, and fish fell by 68% in the last 50 years. In the tropical Americas, the rate was worse, with a 94% decline in the same period, and the size of observed wildlife populations in or near freshwater globally have fallen by 84%. Continued human abuse of the planet may lead to the collapse of the systems and resources that allow global civilization to persist in the first place. Overfishing and hunting, invasive species, pollution, habitat loss, and climate change are the main causes of this animal population crash. The report compiles evidence from 4,392 different vertebrate species and concludes the evidence for humanity's destruction of biodiversity is unequivocal. Using powerful computer models to simulate policy that stops biodiversity loss, scientists have explored scenarios to slow the trend. Such measures would include expanded conservation, increasing agricultural yields while also eliminating food waste, and cutting the global meat intake in half. By changing what the world eats and how it produces that food, nations could stop this tragic loss of life by almost 50%.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
You need to have a business model fundamentally where when you do well, the world around you is doing well. If that is broken, it's very hard to fix.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. Twitter reported fourth quarter revenue that beat estimates, but the social network added fewer new users than projected, and Twitter warned that audience gains in 2021 will slow down compared with last year's surge that was fueled by the pandemic. And the controversial former pro football quarterback Colin Kaepernick has joined the SPAC frenzy. Kaepernick is co-sponsoring a blank check company that will look for a business in the consumer sector. He hasn't played in the NFL since 2016. That's the year he launched player protests during the national anthem to bring attention to racism and police brutality. And in the latest episode of Bloomberg Studio 1.0, host Emily Chang sits down for an exclusive interview with Microsoft CEO Satya Nadella. One of the topics they discussed, antitrust issues facing big tech companies.
You need to have a business model that really is aligned with the world doing well. I think that's what's being litigated, right? Which is there are certain categories of products where the unintended consequences of the growth on that category or lack of competition in it creates issues. And so that's what I think people are all looking at and saying, hey, what's the fix for that? But I don't think big by itself is bad, but competition is good. And every business, in particular, the businesses that are large and have high scale, the unintended consequences of scale cannot be dealt after the fact. They need to be dealt while you're scaling.
That was Microsoft CEO Satya Nadella. You can catch his exclusive interview on Studio 1.0 with Bloomberg's Emily Chang at special times today. That's coming up at 1 p.m., 5:30 p.m. and 9:30 p.m. Eastern Times. And that is your Bloomberg Business Flash. Francine.
Thank you so much, Ritika. So we're looking at equities, we're looking at bonds and FX. If you look at the equity story, of course, it's all about reflation. If you look at global stocks, they're still pushing forward on the heels of positive corporate news, certainly here in Europe, but also improving virus trends and U.S. stimulus plans. And then I also want to show you platinum simply because it was gaining. I don't think I have it in this data check, but I'll do it in the next one, Tom, in honor of St. Valentine's.
In honor of St. Valentine's, thank you for reminding me of St. Valentine's. That was a saintly reminder as well. Mari Barra of General Motors in the 8 o'clock hour, a timely interview on Norway. This is Bloomberg. Good morning.
is focusing on is not so much what goes inside the cars of the future. So they're not working on doing a self-driving car or an autonomous vehicle themselves, but rather they're focusing on the surroundings. So everything is going to go on outside the vehicle in the future. So that's sensors, cameras, radars that are embedded into roads, street signs, traffic lights, bus stops, infrastructure that's going to provide information, something to help the vehicle know what's going on around it, to help it, be on schedule if it's a bus, or avoid other vehicles, avoid accidents, provide information about weather conditions, potential hazards down the road, and so
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg is your best source for earnings, news, and analysis. On Wednesday, GM CEO Mary Barra and Coca-Cola CEO James Quincy. Following their company's earnings announcements, this is Bloomberg.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, we were just talking about the markets and the reflation trade with Cameron Kreis. He's Bloomberg macro strategist. Cameron, what does the reflation trade actually mean from China? We were speaking with our end occurring about some of the activity over there, some of the unbalanced recovery that we're seeing, even if we're seeing strong recovery. Could we be importing inflation from China as well?
Yeah, very possibly. Lost in a lot of the narrative of the last year or so is the fact that the old bugbear of external imbalances has reared its head once again, and the U.S. runs a tremendously large trade deficit broadly and specifically with China. So insofar as Chinese production costs are rising, even outside of tariff considerations, then that would, all else being equal, lead to higher import prices. And if domestic stimulus in the United States leads to more consumption of goods imported from China, then in a sense, it's exporting some of the stimulus.
Strategy gives us a new chance to buy Canadian dollar. I'm looking to buy at 126.949. We're just right here. So we placed an order. So if you're looking to buy Canadian dollar against United States dollar, here's your chance. This indicator gave us buy signal. Okay, speak to you later, guys.
It always goes further and longer than rationality, than traditional concept of rationality think it would. In terms of what could pop it, I've discussed earlier in the segment. Inflation is an obvious one. If you get a very sharp acceleration of inflation, then even from thinking in terms of a fundamental prism, you're reducing substantially the net present value of future cash flows. And when you're trading at very large multiples, ultimately you're paying more for cash flows into the distant future. Inflation means you have to discount those significantly, thus lowering the present value of stocks.
But Cameron, to inflation, it all depends on how much the Fed and central banks in general are willing to look through it. What do you think the pain threshold will be like?
Well, I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will be willing to look through it. I think the Fed will I think in the short run, it's going to be pretty high. It's pretty clear that the Fed in particular is sort of laser focused on employment. And until you get the unemployment rate down, certainly I think into the 4s and potentially even the low 4s, the Fed would, I think, would be quite reticent to act on trends in inflation, because they'd be concerned about sort of stamping out the ongoing labor market recovery. I think there's almost this complacency in terms of central banks, is that they have a game plan and they know how to combat inflation. Of course, knowing how to do something and having the desire, the fortitude to do so are two separate things. And that's going to be an interesting trend, particularly as we move through the year, is whether the Fed has the fortitude to move on inflation, if that is going to be warranted.
Yeah, and I guess the ECB also has the added complexity of what happens to euro if we see euro strength, especially compared to the dollar. What's your take on dollar?
Well, I think it ultimately should weaken because of sort of twin deficit considerations. And that's a sort of a longer term macro forecast, if you will. In the short run, the two headwinds to that are positioning, where we have seen some of those positions close, but I think broadly speaking, the market generally is still short of dollars on anything but a very, very micro term basis. And for the time being, there is this theme percolating through the market that vaccination speed is dictating expectations of short-run currency returns. And countries like the UK and the US are outperforming continental Europe by a fairly comfortable margin. So if and as we see the major Eurozone countries start to ramp up vaccinations, then that will provide a foundation, I think, for the euro to appreciate perhaps more aggressively. Until then, there's always going to be this risk that markets focus on this wedge between sort of the Anglophone countries that are doing a better job of vaccination and the continental Europeans who are widely deemed to be lagging in that regard, and thus delaying an eventual reopening and normalization.
Thank you so much, Cameron Kreis there, a Bloomberg macro strategist, joining us this morning. Now let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Thanks, Francine. House impeachment managers argued that Donald Trump must be held accountable, and the Senate has agreed. Senators voted 56 to 44 that it is constitutional to try the former president on whether he incited a mob to storm the Capitol. 6 Republicans crossed party lines to vote with the Democrats. That sets the stage for opening arguments. And Donald Trump has asked Palm Beach to let...
I have to cancel the order to buy Canadian dollar because it moved substantially higher. So basically, let's wait for another time. So you need to cancel as well the order if you follow my trades. Okay?
Coronavirus stimulus package. Amongst the revisions, they want to end drug rebate caps for pharmaceutical makers. House Democrats also want to expand health insurance programs for the poor. And one dose of the Pfizer-BioNTech vaccine offers 2/3 protection against coronavirus. That's according to data seen by the UK government. The data shows that one Pfizer dose gives as much as 65% protection. 2 doses see protection rise to as much as 84%. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Ritika, thank you so much. Coming up in the next hour, we'll be talking to William Lee, Milken chief economist. A lot to focus on between stimulus and impeachment. This is Bloomberg.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about the environment, the politics of global warming.
We will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Persistent is it?
How much of a pop in prices do we get as the economy opens and consumers have money in their pockets? And then second, how sustainable is it?
If we're able to get people vaccinated, we're going to make big improvements on unemployment, and it wouldn't be surprising to see the cyclical elements of inflation build.
The policy will remain accommodative despite the reflationary building, so the front-end rates will remain anchored.
There could be some momentum building behind yields.
We're going to get inflation of airfares and hotel rates.
Most of the investors believe that, you know, the inflation and rising rates are a bit out there, and that there's probably more downside risk to rates than huge upside.
The zeitgeist of the moment on reflation. Heard from Mr. Kaplan there. Thank you, Michael McKee, for that important conversation with the Dallas Fed president. Right now joining us, and it's been way too long, he joins us with the Milken Institute, his tour of duty with Citigroup, and of course his important work with the dreaded Green Book of the IMF. Folks, if you pull out the Green Book of the IMF, William Lee invented, and you'll find out where our financial stability is. Bill Lee, where's our global financial stability right now? Back in the appendices of the Green Book, how are we doing?
I think the assessment has been universally that the high rise in asset prices of the lockdown, that's changing consumer patterns from goods and services to asset prices. And quite frankly, the financial system is very stable, especially since the Fed has come in to provide so much liquidity and actual support in actually buying up corporate bonds and ensure that the plumbing of the system is actually in shape.
Along the path, Dr. Lee, of where we are heading, there is an assumption of a return to a higher service sector inflation and a reduced disinflation in goods producing. Is that going to, or is there a new paradigm?
I'm glad you're bringing this topic up, because everyone's talking about the fear of inflation that's about to come upon us, because the stimulus is many times the multiple of the output gap. We're going to see so much in the way of recovery. Everyone is just chomping at the bits to spend. And I think one of the things is that the service sector itself has been crushed because of this recession. There's been of 10 years, there's been about a huge doubling of the number of people who are working in the service sector. There are 6 people in the service sector for every person in manufacturing of goods and goods. So what we see in this world is that inflation is going to come from the service sector, but when we open up, there's going to be bottlenecks. So there's a price level jump that we're going to see. That's very different from inflation. And as President Kaplan said, itself is worried about sustained increases in prices that go over and above their target of 2.5%. We're not going to see that, because after 2 or 3 months of say 2 or 3% inflation, things should start to level out as supply constraints start to come back online again.
Sorry, Bill, are you really telling us that given the, 1.9 trillion, I mean, it's a sizable chunk of U.S. GDP, and that's still inflation?
It's going to cause a huge bottleneck in terms of demand. People are going to want to spend their money. But what we've noticed given the stimulus that was given before is that people have been spending a lot of that money to the extent that they have discretion, paying down debt and buying assets. And that accounts for a good chunk of why the equity markets. And that explains a lot of the Robinhood crowd that's been going out speculating on GameStop. So we have a lot of asset price inflation, yes, and that's with the new stimulus. What is a shame that's not talked about is that the fact that that happens means that the stimulus isn't going to places where it should go. It's not a stimulus package. It's really a relief package. The people who are unemployed in the service sector, entertainment, hospitality, and leisure, those are the businesses are closing. Those people are actually spending as they would normally spend. They're trying to come back to the levels of normal spending, so that deficiency of demand is made up for by the relief package. All of that money could, if it's focused on that, not cause inflation. What would cause inflation in asset prices is the fact that it's going to the wrong people.
Yeah, and I really actually want to come back to, if you look at the difference, and I know, Bill, we started the crisis where the U.S. economy was in a different place to Europe, but, if you look at a relief package, does it need to be much more targeted, like furlough programs, or is the U.S. approach okay?
Actually, that's exactly the point. The targeting has been insufficient. And the evidence of its insufficiency has been the enormous amount of spending on Pelotons and GameStop shares, as opposed to supporting the unemployed worker that's been laid off from the local restaurant and the failed businessman who.
Okay, ladies and gentlemen, you need to place a stop on profit for Swiss franc, and I am going to place stop on profit at 0.8992. I will point out where it is. Just right here. I will change color. So at least I will make sure that if it will go down, I will close this trade in profit. Okay? So, and I will just write that this is stop. Okay, just right here. So all of you guys, you have to do the same, okay?
Other aspects of President Xi's speeches has been that say that he wants to spur technological innovation within China. He wants China to be independent of the rest of the world. The chip shortage has been an example of where China has been trying to buy up a lot of chips in advance of all this, but the chip industry has been a high priority item.
Billy, is a great missed call here that we're going to get 5 or 6% U.S. GDP, plus or minus 1. Who knows, that we're going to get it for a longer duration, and that imputes over to a China GDP of 7 or 8, or dare I say, 9% real GDP?
Well, that really brings into question the notion of locomotive. Is the U.S. going to be a locomotive for growth for China, or is it?
We just closed position on Swiss franc at 0.89092. Okay, hold on, we'll wait for another chance to enter position.
World. For the United States, we still have a huge demand for laptops and electronics that come from Asia, and China is a big supplier of that. That's why China's surplus has been so enormous, and our deficit with China has been so enormous, because we've been buying up laptops like crazy and other electronics that come from China, and medical supplies. So in terms of our ability to pull China up, yes, that is in some ways China letting us be their second leg of the dual regulation strategy.
Bill, very quickly, are they exporting any inflation to the rest of the world?
That's been a misnomer. In the mid-2000s, the big fear was the deflation exported by China. China wants market share more than anything else right now. Any sorts of increases in production costs are going to be absorbed by the Chinese producers, because their desire is to become dominant in key industries in the rest of the world. They're not going to let price increases prevent them from doing that.
Bill, thanks so much. Bill Lee there of the Milken Institute. Now, up next, we speak with Lauren Sauer, Johns Hopkins University Associate Professor of Emergency Medicine. We talk COVID-19 as we continue tracking the pandemic. This is Bloomberg.